I'm going to share 18 stocks that I think are worth looking into for potential investment opportunities. The whole point of this video and this channel actually is to bring stocks to your attention so that you can then go away and research them thoroughly and decide whether or not you want to make an investment. You should always do full research before adding any stock to your portfolio. And if doing the research is a real pain point for you, don't worry at all, I've got you covered. I've got an entire workshop built out. It's a whole blueprint of how to find potential stocks, to then researching them thoroughly and deciding whether or not you want to add them to your portfolio. We've had some incredible reviews of people that have already completed this workshop, so if you want to join in on that as well, I will leave a link in the description below. The first stock today is Cipher Mining, which is a Bitcoin mining company operating data centers in the US to, of course, mine Bitcoin. It comes as no surprise that Bitcoin mining companies and their performance is closely linked and related to how well Bitcoin is doing. They are most profitable when the Bitcoin prices are increasing. And if you follow crypto at all, you will know that over the last 6 or so months, Bitcoin has actually been doing really, really well. And we are anticipating that we will see a bull run coming up for cryptocurrencies and a Bitcoin halving event very, very soon. If this goes as planned, we would expect that Bitcoin mining companies will also profit. For Cipher Mining in particular, they recently had their Q4 earnings and they were very, very good. They had record revenue, increased hash rates, and they announced expansion plans. And after this, the market really liked it. And you can see that over the last 1 month, the stock has been doing very, very well. Definitely better than what they've been doing over the last 6 or so months. The second one today is Palantir, and there is no way that you have not heard about Palantir if you are at all interested in the world of stocks and investing. Personally, for me, this is a big position in my own portfolio. I'll be 100% transparent. I am very, very bullish on this company. They specialize in big data analytics, and they provide software that allows organizations, government and commercial, to integrate, manage and secure their data. And they are also now emerging as one of the leaders in artificial intelligence with their whole platform called Artificial Intelligence Platform. AIP. I'll quickly recap just a couple of reasons why I'm so bullish on this position, but I do urge you, if you want to know way more about this, check out my main channel, which I'll link on the screen now, because I cover this stock in so much more detail. Firstly, they offer a solution to real problems that many companies, like I said, both on the commercial side and government side, are experiencing. The way that the world is going, we are very much shifting to data being the new language, and a lot of businesses are finding it really difficult to have so much data and not really be able to utilize that data, have it in one controlled place, and actually understand what that data is showing them, and then using that data to make real business changes. That's where Palantir comes in perfectly. Secondly, their total addressable market. Absolutely massive. They are not restricted by one sector. They don't have to just work with the healthcare sector. They can work with Ferrari, the sports sector, the finance sector. They can work with the healthcare sector. Like, so many different options for Palantir. And I've kind of hinted at this one a couple of times, but they have their business split into two, which means diversifying their revenue stream. They have both their government organization contracts, which tend to be lengthy, expensive, very sticky, and then they have their commercial section, which is a bit more fast paced. And like I said, the total addressable market, the sectors open to them, are kind of endless. Over the last 1 year or so, Palantir has been one of those positions, one of those stocks that has done incredibly well. Over the last 1 month though, still really good performance, but they have had a little bit of a dip, which could be due to them actually not being selected to be included in the S&P 500 index. That's not to say that they won't be, just this time around, they were not selected. Next up, we have a company that I'm actually starting to really research in a lot more detail, because it's a very exciting opportunity, and that is New Holdings. Particularly that's the parent company, and then they have New Bank sitting under that. This is a position that Warren Buffett has actually recently started getting interested in, and he has over 100,000 shares in his own portfolio. Nubank is positioned as a fintech company, and they are one of the biggest providers in Latin America. One of the reasons that they are doing so well is because they are really benefiting from the growing population and the growing youth in Latin America. And with this growing population, they are actually becoming more connected and more digitized than ever before. In markets like the US and the UK, we kind of just take for granted that in just a matter of clicks on our phone, we can access our banking app. That hasn't really been the case in different markets around the world, like the Latin American markets that Nubank are serving. They have had a traditional banking system, and actually a lot of the population are unbanked, especially in some of the markets that Nubank are now trying to get into. So to be able to offer this fintech structure whereby they're not actually serving their customers in traditional brick and mortar buildings, it's via an app. It's completely new out there, and it's taken them by storm, and it's very, very popular. Their customer growth is absolutely insane. Over the last 1 year, new holdings have done extremely, extremely well. And even over the last 1 month alone, very, very good. You can see that if we max out the graph here, they haven't actually been public for all that long. The next one on our list today is a global engineering company called Rolls-Royce. I think it's fair to say that a company like Rolls-Royce is quite a cyclical company. And recently they have been benefiting from some of their cyclical advantages. Military spending has been particularly high recently, given everything that has been happening in the world. And also travel demand has been quite strong, moving out of the COVID era and the lockdown era that we've been seeing. Both of these things really, really help their profitability. They actually get about half their revenue from the aviation industry. Now, the aviation industry can be particularly volatile. It's very cyclical. It depends on a lot of things. But there is deemed to be a lot of growth prospects over the upcoming 2 decades for this industry, and Rolls-Royce is one of those companies that could benefit from this. For example, Airbus, they said that they are going to need about 40,000 aircrafts by 2042. And that is a huge, huge demand that Rolls-Royce could potentially capitalize on. Rolls-Royce stock since about October 2022 till now has increased by about 416%. Which is absolutely crazy. And actually where they're sitting now in terms of stock price isn't too far off the all-time highs. But you can see having a stock like this can be quite volatile. Now we have CrowdStrike, which is again one of these stocks, one of these companies that has been getting a lot of attention in the recent few months. They provide cloud-delivered protection against endpoint cyber threats, and they leverage machine learning and artificial intelligence to do this. They only actually went public in 2019, but it is suggested that the cybersecurity budget within companies is actually going to be doubling in the upcoming years. This could then lead to a surge in the demand of cybersecurity solutions, CrowdStrike being one of the companies that are positioned there ready and waiting to deliver this. I do think that this sector of cybersecurity is only going to continue growing, especially with the increase that we are seeing in the demand for artificial intelligence and cloud-based computing. In my opinion, cyber threats are only going to continue to increase in how common they are. We're going to have new rules and regulations around them. We're going to have new devices, new hacking methods. All of these things scream needing security. CrowdStrike recently announced their Q4 earnings as well, and they did particularly well, and the market really enjoyed what they had to see. You can see that just over the last 1 day, up by over 25%. So the market loved the earnings, and if we zoom out to a 1-year period, absolutely fantastic. The next company needs absolutely no introduction at all. I'm sure that you literally have one of these products within hand's reach of you right now, and that is Apple. Of course, they are known for their consumer electronics, their software, and their services. One reason why I really like Apple as a potential investment opportunity, but also as a consumer, is even though they are a massive company, one of the biggest companies in the world, they continue to try to innovate. They continue to push the boundaries and come up with new solutions, new products that are unlike anything before. And they've recently done this again with the Vision Pro. Now, this is a big movement forward towards where we're going in the world. That's not to say that this is an absolutely perfect product and it has perfect use cases. I don't think that's the case. But it does show that they are there ready and waiting to capitalize on this. And also, Apple, one of the best ecosystems in the entire world. The loyalty of consumers is kind of unmatched actually. And once you kind of lock yourself into one Apple product, chances are you're not leaving, you're sticking around, and you will only continue to buy new Apple products that all feed into this ecosystem. And because of all these things, they quite literally are printing cash. Now, Apple stock haven't actually been doing all that well recently. They are down over the last 1 month, 6 months, And over the last 1 year, not so great in terms of growth in stock price that you would expect to see for a company like Apple, but you've only got to max it out to see just how good they have been doing over their lifetime, and now may actually represent a good buy-in opportunity. Let me know what you think about that in the comments below. Another massive, massive, massive company coming up next, but one from a completely different sector. Walmart. They are the world's largest retail corporation, offering a wide range of goods and services. Sector-wise, they are positioned in the consumer staples sector. This means that as an investor, we can have more confidence that they will do well as a company, even if the economy is taking a turn. If we go into, a downward streak or even a recession, they are going to be able to survive that like they have time and time before. As the economy moves through different phases of a business cycle, different sectors are more likely to perform better during different stages. This is absolutely normal, but we must understand this as investors because we might want to actually use that as a strategy. We might want to move money from one sector to another as the economy moves. We also might not, but it is good to understand. Now, what we see from a company like this is they don't tend to have such fast growth as maybe a Tesla does or a CrowdStrike or a company that is positioned within the growth tech sector, but they have been doing really well nevertheless, up over the last 6 months, 1 year, 5 years, and if we max it out, again, absolutely crazy, great stock price growth. Next, we have a company that I have mentioned on this channel a number of times, and that is Robinhood. Robinhood are a financial services company, a fintech company to be more specific, and they offer a variety of different services. One thing that they are particularly known for is their commission-free trading and their great mobile app to do this on. But they are expanding, and we'll come back to that. They had a very impressive Q4 earnings as well. It seems to be the theme at the moment. They beat both estimates on revenue and EPS, and their monthly active users are on the rise. So they are expanding. They are expanding both in their services and products that they offer, but also the markets that they serve. And they are executing on these expansion plans very, very nicely and very well. They also smartly have ties to cryptocurrency. And like we were saying earlier, with an upcoming crypto bull run, Bitcoin doing very, very well, people getting very interested in actually starting a crypto portfolio, they are positioning themselves very well to capitalize on that. Robinhood stock, since going public, hasn't had a great time. They had a sudden surge after IPO, which is, normal to see. And then since then, it's still down by about 70% or so from all-time highs. However, in the last 1 month, even in the last 6 months, they have been performing very, very well, and we'll need to see if this momentum continues moving forward. Now we have a company that you may not have actually heard about unless you are a UK investor or you live in the UK. And that is Unilever. Unilever is actually a multinational consumer goods company. They're known for their food, beverages, cleaning agents, and even personal care products. They have a portfolio of products that is so vast. The whole sector and safety thing that I was explaining earlier when it was related to Walmart is also particularly true for Unilever. They have products that people need no matter what the economy is doing. However, Unilever position themselves and their products as more of a premium offering. They have named brands that households, that families around the UK in particular, and expanding further from that, always know about. Within any UK house, I'm pretty sure that everyone has a Unilever product. So there is real big consumer loyalty. People are willing to pay a little bit of a premium for their named brands. Now, Unilever are very, very smart because what they do, very clever strategy, they are Unilever as a brand, but under that, they have all of their brands that they own. So they have all these different companies that you'll know about, but you don't know necessarily that they all fall under Unilever. This is smart because this means if a news article comes out about one of these brands or there's a regulation break about one of them, whatever it may be, it doesn't actually impact the rest of the products because people don't necessarily know that they are all owned by the same company. Also, Unilever is an absolutely solid dividend option for you guys that really, really want to build your passive income. Unfortunately though, when we look at Unilever stock, they haven't been having a particularly good time over the last 1 month, 6 months, 1 year or 5 years even. It's only when you actually max out the graph that you start to see that over the long term, they have been doing very, very well. Next, we have the stock of 2023 and maybe even the stock of 2024. Nvidia. Nvidia make GPUs, which is graphic processing units, used for playing video games and powering really complex, incredibly complicated computer models. These are used for AI training, robotics, self-driving cars, the list goes on. Q4 earnings, they did fantastically. They knocked it out of the park again. I honestly don't know how they keep doing this. They keep outdoing themselves, outperforming themselves, and you could actually argue that even though the stock price has had incredible growth, they are still undervalued at current prices. I do think that there is potentially a stock split coming up, which as investors we should absolutely be aware of. And I made an entire video talking about why I think that is and what that could actually mean in terms of our investment into Nvidia on my main channel. And if you want to watch that, I will link it on the screen now. If we look at Nvidia stock over a 5-year period, it is absolutely insane. March 2019, $37 a share. Roll forward to today, $859 or so a share. Absolutely incredible. Over the last 1 month, insane. 6 months, insane. 1 year, absolutely amazing. Honestly, look at that. Max it out. It's like a rocket taking off to space. But they are really sustaining their momentum so far. And I think it's very, very well deserved when we actually look at the numbers behind what we're seeing in front of us on the charts. Let's stick to growth stocks and the tech sector now. And the next one we need to speak about is Microsoft. Like with Apple, again, everyone has heard about Microsoft. It really is a household name. They absolutely dominate the PC software market with more than 70% of the market share for desktop operating systems. And their Microsoft 365 application suite is one of the most popular productivity software services globally. Microsoft actually haven't seen insane growth over the last 1 year as some of the other growth tech stocks in the industry, but it doesn't take a genius to click into the longer term, look over 5 years and max out the graph to see that they are really a powerhouse. The next one is my personal largest position in my portfolio, but it is a stock, a company that is more like Marmite. You either love it or you hate it. It is, of course, Tesla. Now, obviously, they produce, design, manufacture electric vehicles. They are the leaders of this. They have completely changed the transportation industry, and they will do that again with their robo-taxis. But yeah, they've really increased the adoption of electric vehicles globally. But aside from their EVs, they are also leading in electric vehicle charging. They have a network that is unmatched, but they also have the hardware that is unmatched, and people are now taking notice of this. They are also a leader in alternative sustainable energy storage with their Megapack products. Again, we need to add to this because they are now also a leader in AI and robotics. So just to call this company a car company makes no sense anymore. Again, I do cover this company in so much detail on my main channel, and I will link actually a recent video on the screen now that I made that I think you will really enjoy if you are at all interested in Tesla. Now, as Tesla investors, we have had to have a really strong stomach recently because over the last 1 month, 6 months, and 1 year, the stock price hasn't really done anything. And if it has done anything, it's gone in the downwards direction, which has been quite hard to see, but that's where your mindset and emotions really come into play. The 13th stock on our list today is a fintech company called SoFi. SoFi stands for social financing, and they have a mission to help their users achieve financial freedom. And they actually operate in 3 key areas: lending, financial services, and then they also have their tech platform called Galileo. They have shifted their direction and offerings very, very rapidly, and they've now actually transformed themselves into like a one-stop shop for financial requirements, which is really, really smart. They are able to offer a consumer what they need for their entire lifetime. There is a real investment community building up around SoFi. Lots of people have done a lot of research into this company and are very, very bullish indeed. They have seen really good growth. They have been able to consistently grow their members over time, which is a great, great sign. However, the stock hasn't been doing too well. Over the last 1 month and 6 months, it has been falling. And like we saw with Robinhood, this company didn't go public all that long ago, and since then it is down from its all-time highs reached momentarily after the IPO date. They've also recently had some news that has shaken things up a little bit, and not all investors are on board and excited about this. However, we're just going to have to see what happens. I do think that this is an investment worth looking into. Now we're going to move to a sector we have not yet covered in this video, biotech. The stock, the company in particular, is Intellia. Now, before I talk about Intellia specifically, let's just talk about this sector as a whole. So this idea of personalized medicine, genomics, gene editing, these are all areas that I think are really up and coming. It's going to be the new way in which we do things. Like we saw a shift from ICE vehicles, internal combustion engine cars, to EVs, like we saw a shift from non-internet days to internet days, all of these big changes that we see, no artificial intelligence to artificial intelligence, the list goes on. I think we are going to see a very similar thing in personalized medicine and gene editing technologies. So now, why Intellia? Well, actually, there are a number of different companies that you could invest in and look into this. And it's difficult to say which one is actually going to be the leader because it is very, very early days. One thing I really like about Intellia is that they have been making significant progress and actually have a couple of really, really big programs that could do particularly well in the upcoming few years. They are also looking at both in vivo and ex vivo treatment, meaning inside and outside of the body using CRISPR. And they are looking into cancers, autoimmune diseases, and genetic diseases. If you want to invest into companies giving you exposure to this sector because you think it's going to be good in the long term, but you don't necessarily know which stock to pick and you would feel more comfortable with an ETF, you can absolutely do that. There are some fantastic ETFs out there for this. And a great platform to buy ETFs on is Invest Engine, which actually offer low cost ETF investing. And if you use my link in the description below, you will actually get a welcome bonus of up to £50 when you deposit £100. Intellia, since going public, has been on quite a journey. You can see that they've had periods where the stock price has increased significantly over a short period, reaching all-time highs, and then it's fallen significantly over a short period as well. So it is going to be one of those stocks, it's in its early days, it's a growth stock, it's in a sector that there is fast growth, lots of changes happening quickly. It is going to experience volatility, so make sure you're aware of that before investing into any companies like this. So you may not have heard about Intellia before, but the next stock you have definitely heard about. Another household name. This time it's Amazon. Again, doesn't really need any introduction, but they are a multinational tech company and they focus on e-commerce, cloud computing, digital streaming, and now as well, like many companies, artificial intelligence. Now, everyone knows that Amazon is absolutely a titan, but not many people really know how diversified their revenue streams are. Many people, when they think about Amazon, they think about their online Amazon e-commerce business, but they are so much more than that. Yes, they have their retail side, but they also have Amazon Prime, and we absolutely cannot forget about the powerhouse that is Amazon Web Service, AWS. Amazon for me is one of the best performing stocks in my portfolio, but that is because of the time that I started adding shares. I was adding Amazon when it was falling by quite a lot. This means that my return has been very, very nice. But over the last 1 year, they've performed incredibly well. Over 85% return for investors over a 1 year period, which is extremely good. But when we look across the industry and we see what other companies have been performing, returning in the same time period, it makes this number feel small, but it's really, really not. Maxing out to a 5 year period and then max, incredible. Absolutely incredible. For people buying down here earlier last year, February time last year, which is when I was buying, look at it since then. It has been like a rocket taking off. Amazon is obviously a very established company, but the next one is definitely more of a newer and upcoming company, and it's one that I have spoken about on this channel a number of times, and it's one that is getting a lot of attention recently, and a lot of you guys actually that are commenting are particularly bullish on this position as well, and that is Celsius. They are positioning themselves as a fitness brand, but in particular, they are offering a healthier version of energy drinks. The thing with Celsius, and I won't go into too much detail because like I've said, I've made completely separate videos going into more detail on this company, and I'll leave one of them linked on the screen now, but they seem to have come from absolutely nowhere. The demand for their products, their drinks, is crazy. They are now, competing with the likes of Prime, Red Bull, Monster, these giants that we all know about. They're out-competing in a lot of places. They are the #1 seller in this category now, I believe, on Amazon. They are beating sales for like these other companies that I just mentioned, and their products are everywhere. They're in petrol stations or gas stations, big convenience stores, grocery stores. They're online. They're literally everywhere. And I've heard stories about how shops are actually not able to stock their shelves faster than they are selling them. So demand is insane. They're everywhere and they are expanding fast. They're doing really, really well in the US market, but now they're coming over to Europe, Canada, and it doesn't seem to be slowing down anytime soon. I've been talking so long that my light has just died behind me, but we will power through and we will continue. Celsius over the last 1 month, incredible, up by over 55%. 6 months, again, very, very good, but you can see recently they've had a little bit of a surge. It's gaining more momentum. They had their earnings come out. A lot of people are getting bullish, taking notice of this company. And like I said, they didn't really start doing much until very, very recently. And you can see that in their stock here. They've really shifted direction, used social media more, and now they are taking off. We have just 2 more stocks to cover on our list today, and number 17 is Intuitive Surgical. They develop, manufacture, and market robotic products that are designed to improve clinical outcomes of patients through being minimally invasive. So they are manufacturing robotic products to do surgeries in a more minimally invasive way. This means better outcomes for the patients. There are many things that we could say about this company and why they are positioned very well, but the world is moving towards automation. Automation in many, many different industries, and this does include the healthcare and the surgical industry as well. We will get to a point where most operations are done by robots. This is a company ahead of its time, and they are already producing those products that are being used, and we are seeing great results. This stock has been doing very well over the last 6 months, 1 year, 5 years, and if we max it out, we can see that since going public, they have performed very, very well. It has been a little bit volatile here and there as expected, but all in all, it looks like it has been a great investment for people that were investing since the IPO date. Now let's end on a stock that is particularly strong and has been for many, many years. Costco. They are an international chain of membership warehouses, and they offer a wide range of products at a particularly low price. And they have seen continual growth, and they are now actually the world's third largest retailer in the entire world, behind Amazon and Walmart. Now, the reason that Costco stands out is because they offer an exclusivity feature. They have a unique membership-based model. No other retailers really that I know about are actually doing the same thing as them. This sets them out and it makes them really desirable. And it also increases customer loyalty. And this means for them that they see repeat purchasing behavior from their customer, and also they have a reoccurring revenue. This is insane, and they do really, really well. This is a dividend paying company, and although their dividend yield isn't insanely high, they have been able to consistently grow their dividends year over year, which is a very stable feature if you are a dividend investor. Stock price wise, very, very strong indeed. 6 months up by over 40%, 1 month, very, very good, 1 year, great. 5 years, insane. Max it out, very, very strong. Obviously not matching those tech companies that we've seen, but it is a company that is going to do well no matter what the economy is doing, like we saw with other companies in the consumer staples and consumer goods sectors. Let me know if you have any of the stocks that we've covered today in your own portfolio, or if you're looking to add any of them anytime soon. Remember, if researching stocks is a pain point for you, you can sort that out very, very easily by taking my workshop, which I will leave linked in the description below. Stay tuned for the next video, but until then, keep analyzing, keep investing, and don't forget to hit subscribe.